स्टेट म्हणजे बोलायचंच नाही.
Soil, sir.
Rakesh sir will start.
Yes, Soil, sir.
Ravi sir, shall we start?
Yes, yes.
Okay. Welcome, members, for this webinar series named as Lockdown Knowledge Series under the Break the Chain lockdown imposed by Maharashtra government. We have very routine but challenging topic now. Today, it's been 4 years since GST is rolled out, but still we can't get what type of provisions are there for claiming ITC and all related topic, for which we have our branch past chairman CA Ravi Rathi sir, who will guide us on ITC and other related topic under GST. I request Soil Shah sir to introduce today's speaker, CA Ravi Rathi sir.
Thank you, Rakesh sir. I welcome all the members for this webinar. I wish every member happy Mahavir Jayanti. It's my privilege to introduce our today's speaker, CA Ravi Rathi sir. He is FCA. He has also completed integrated law degree from Symbiosis Law College, Pune. He is qualified DSA. He has also qualified certificate course on indirect tax held by Institute of Chartered Accountants of India. He is practicing as a senior partner handling indirect taxation in Messrs. Praveen R. Rathi and Associates, Chartered Accountant Nasik, for past 16 years. Currently, he is working as a member of Indirect Tax Committee of Chamber of Tax Consultant, Mumbai. He is a past chairman of Institute of Chartered Accountants of India, Nasik branch. He has also worked as secretary vice chairman for the Institute of Chartered Accountants of India, Nasik branch. He is bestowed as the best faculty for corporate training at L&T. He has contributed to various seminars, study group, and study papers. He is selected as one of the faculty for GST by Institute of Chartered Accountants of India. He has contributed to seminars at sales tax department. He is representing for assessment appeals before various authorities. With this brief introduction, I request our past chairman, CA Ravi Rathi sir, to enlighten all the members. And I also welcome all the members of Tax Practitioner Association of Nasik branch. Welcome, Ravi sir. Over to you, Ravi sir.
Good afternoon all, and thank you Soil for a wonderful introduction which you have had for mine. It was indeed hearing good something about me.
Sir, I missed one sentence.
Yeah.
He is also a GST king for Nasik.
At the outset, thank you once again, Nasik branch as well as the Nasik Tax Practitioners Association for giving me this opportunity to share my views on the allotted subject of input tax credit. Friends, I have tried to highlight all, in the session which I am going to deliver, I will try to highlight all the intricacies and open issues. Now, since GST, we have 4 years from July 2017 till now. Approximately 3.5 years are over. So we are all aware about the basic provisions of input tax credit, and therefore it would be, I will link the basic provisions along with the issues and will try to address some issues you might find that there are some open issues which have two ways of answer, that is yes also and no also. But then these two answers, I mean, one which we are following in our day-to-day practice, and second answer is a strict or legal interpretation of that, basically a provision where you may feel it as an absurd, but then the time and again it will time will really tell us as to the real interpretation of that provision. So with this, let me also once again thank Rakesh as well, and the branch chairman, and Deshmukh Sahab and Chauhan Sahab, who have joined us representing the Nasik Tax Practitioners Association. Now with this, friends, let us come to an basically the relevance of this indirect tax provisions or GST. Now, as we are aware that I mean, there are many models of implementing value-added tax system in across the world, and one of the system of implementing the value-added tax system is that of the system which we are following, that is levying a tax on an outward side and allowing an input tax credit vis-a-vis following some conditions of the input tax. So some you might recall that at some stages we were paying tax on GP method in the old tax law. That was also a sort of value addition where we used to pay tax on the value addition done by the seller in the previous regime. So in the GST regime, there is no such concept of tax to the extent of resale tax, etc. But then whatever you have done, if you are whatever outward supply you have done, if you are having a sumptuous input credit against that outward supply, or an input credit which is in the course or furtherance of business, you are eligible for that credit. Now, basically speaking, legal provisions relating to the input tax credit, I will be dealing with the CGST Act. So the SGST or the MGST Act are akin. Most of the provisions are akin to the CGST Act. So basically, legal provisions are described in section 16 to 21 of the CGST Act or the SGST Act, that is Maharashtra Goods and Service Tax Act. Now, what we would try to cover in this presentation is the provisions relating to ITC, the intricacies and issues, and the professional challenges which we will be facing while doing day-to-day practice to convince an officer regarding the eligibility, because now the law is evolving, and so there will be multiple issues as we are facing right now. Also, you might have started with the notices of audit, and there are some issues of mismatch, and all we will try to cover each and every issue as the or the chargeability of interest is concerned. So we will try to cover each an issue, and if there is something left, you can always pose a question at any time in a chat box, or you can unmute yourself and raise your query, or otherwise we can have the query session at the end of the session. So friends, this section 16 and 21, section 16 to 21 basically relates to the legal provisions of input tax credit, and there are rules which starts from 36 onwards in the rules which also governs the input tax credit. So all the provisions, now first principle, see, since we will be talking about the input and the interpretational issues. So first legal principle is that that one has to interpret all this provision to ensure that there is a seamless flow of credit. Why I'm talking about this is for the reason that we know that when the GST Act was placed in the Parliament, and if we see the preamble of the GST Act, one could find that the very purpose of this act was to remove the cascading, then to have a tax which is a value-added tax, to ensure the fungibility of credit. What is fungibility of credit? Means you should be able to take all credit anywhere. So CGST, IGST should be taken at CS, C of one state should be taken at C of other state, and all this the fungibility of the credit should be there. That was the basic the mechanism under which the input tax credit was thought. So all other purposes which were there apart from this were to eliminate the possible levy of double taxation, to avoid the cascading, and ultimately that the consumer of the goods, the incidence of the minimum taxes passed on to the consumer of the goods. So all these were the basically purposes of having an input tax mechanism. So the principle first, which we should keep in mind, is, as I have already elaborated, is to enable the seamless flow of the credit. So as to interpret all the provisions in such a way that the object, which I have just now stated, that there should be a seamless flow as is stated in the parliament, that should be uninterrupted. So this is the second purpose, that rather than interpreting and limiting the scope of ITC, it should be read as liberally. The restriction to be interpreted, the restriction means the say section 17(5), etc., or the restrictions under rule 34(4), all these are 86 rule. All those restrictions which are curtailing your tax credit has to be read down very, very narrowly. So this is the third principle which we will be going to follow while interpreting all these provisions of input tax credit. The fourth way is, nowadays we find that it is very, the tax officer or the legislature find it very much easy to amend. Instead of bringing any new levy, they try to amend the input tax credit provisions, whereby blocking of credit or putting of restriction of 5%, 10%, 20%, whatever those restrictions are, or otherwise now the provision which has been proposed by the budget. So all this now they are finding it easy. So I don't think that time and again many of the provisions will have to be tested in the court of law vis-a-vis the interpretational issues are concerned for this. So unlike the old law, where the registered person was not compelled to get and register, he was not required to obtain registration for claiming input tax credit. That is, if you recall the excise law, the refund to the exporter was permitted, even though he was not registered. So this was the position of excise. Of course, I understand that in VAT law, registration was compulsory for availing an input tax credit, but then the excise law, there was such provision. So one has to keep in mind that the registration aspect was also there behind while taking care of the input tax. Now, let us understand some important definitions of the input, some important definitions which will help us to understand the credit mechanism. Friends, you will appreciate that, these are all the definitions which are already been defined in the Act. Now, let us understand first definition, capital goods. What does capital goods mean? Capital goods means goods which are capitalized in the books of accounts, which are intended to be used, which are used or intended to be used in the course or furtherance of business. So friends, understand, capital goods means goods. Nowhere they are trying to plug here the services. So to the extent you capitalize services in your books of account, an issue may arise whether it's in capital goods vis-a-vis the GST Act is concerned. And in my opinion, the services which have been capitalized in the books of accounts are not capital goods, and therefore the reversal provision or the provision vis-a-vis at the time of sale of assets are concerned, etc., or transfer of services are concerned, etc., will not apply to the capitalized services in the books of accounts. So capital goods, you have to interpret very strictly. The capital goods refers only to the goods. Now the second definition is of inputs. And what is inputs? Inputs is very simple, which is anything which is other than capital goods and which is used or intended to be used in the course or furtherance of business is an input. So anything which is not capitalized in the books of accounts and which are goods. So anything which is not capitalized in the books of accounts and which are goods are nothing but input for a dealer. Now let us understand the third definition. The third definition is of input services. And what input services means? So any service. So we know that goods have been defined. That is, goods means any kind of immovable property other than shares and securities and money and things. This is the definition of the goods. And services, we know that anything other than goods is service, and it does not include again money and shares and securities. So input service means any service which is used or intended to be used in the course or furtherance of business. So friends, let us now come to the output tax in relation to the taxable person. What does it mean? So output tax means in relation to a taxable person any tax which is chargeable under CGST or SGST, which is payable on the supply made by him and excludes the reverse charge. So see, reverse charge is not my output tax liability. This is very important to understand. Reverse charge liability has been fastened on me based on certain sections, right? Section 9, 3 and 4. So, but the section 9(1) doesn't fasten any liability of the reverse charge. I mean, saying it as an outward tax liability. It is on the inputs wherever those are specified in the category of 9(3) and 9(4), and therefore output tax liability will not include reverse charge liability in it. So this is very important. When we see interest, etc. calculations, you will understand that why output tax definition is important for us. Now let us understand what is inward supply. Inward supply is nothing but a supply of goods or services, which whether for sale, transfer, barter, exchange, license, rental, lease or disposal made by a person in the course or furtherance of business. So they have tried to cover everything. They have tried to cover sale of goods, transfer of the goods or title in the goods, barter transaction, exchange, that is in lieu of pen, I am getting some other, say, a set of pencils, or license. So license to use a premises, or rental to use rent a cab, I mean rental vehicle, or leasing or disposing of. So all these terms are covered under. Disposing of means selling it by way of scrap, etc. So all these are nothing but an outward supply vis-a-vis the GST is concerned. So they have tried to plug each and everything under the outward supply. Now understand what is the taxable supply. So taxable supply is very simple. The supply which is chargeable, म्हणजे ज्या सप्लायला tax लागणार आहे ह्या कायद्याखाली, the supply which is going to which is chargeable under this act is nothing but a taxable supply for us. Now let us understand what is exempted supply. Exempted supply is of that goods and services which is not taxable. So the supply which is not taxable, that means there is a supply first of all, but that is not taxable. Not taxable means either it will be at a nil rate or some exemption notification will be there under section 11. So these two kinds of limbs are also covered under the exempted supply, but one has to note that it doesn't cover the zero rated supply under this category. Now, what is non-taxable supply? Non-taxable supply is which is not chargeable to tax. That means, for example, liquor or petroleum, diesel, petrol, which are not chargeable to tax, though they are supplies, but they are not taxable supplies. So non-taxable supply. So if you see the exempted supply definition, it takes care of non-taxable supplies. Supplies which are not taxable, supplies which are not taxable, that is covered under exempted supplies. So non-taxable supplies are nothing but exempted supplies vis-a-vis the ITC provisions are concerned. Why I'm trying to say you that is for the reason that when we go for the reversal provisions of the common input, you will understand that all these non-taxable supplies are also to be added to to determine the aggregate turnover for the exempted supplies. Now let us understand zero rated supply. Zero rated supply is nothing but that is defined under section 16 of the IGST Act, and zero rated supply includes two limbs. It has two limbs. One is taking goods outside India, from India, that is exporting of goods, and second is any supply which is made or any service which is provided to a SEZ or SEZ developer is nothing but an zero rated supply. So supply of export and supply to SEZ is a zero rated supply. Now one has to understand that though these are exempted supplies, but still ITC is eligible on these zero rated supplies as well as supplies which are, zero rated supplies, that is to say that export and supplies which are made to the SEZ or SEZ developer. Now taking ahead this, now let us understand a very important definition, which is input tax. And here I will like to draw your attention. If you have any query, you can raise hand when I am explaining this input tax definition, because it is very important to understand. Now, first of all, let us understand what is input tax credit. Input tax credit is nothing but credit of input tax. Very simple, defined under section 263. That Input tax credit is nothing but a credit of input tax. So one needs to understand what is the meaning of input tax per se. Now, input tax is defined under section 255, and which says that in relation, input tax means in relation to a taxable person, and then it means that it is a IGST, CGST, SGST, or UTT charged on supply of goods or services. So now let us understand first limb of this. Friends, try and understand input tax is given one color. What I mean to say over here is, it is not that it is IGST, CGST, SGST, or UTT, which is covered under section 16, because section 16 talks about input tax, and therefore input tax is given one color. So all these 4 or 5 items, whatever these are there, 4 or 5 items, including reverse charge, all these are nothing but input tax and are coming under a single basket. So it is not that we are having 4 or 5 basket with us. It is a single basket. Why I am insisting on this is for the reason that now let us understand the first issue. What will happen? Suppose if I have taken CGST and SGST throughout the year. See, my first question or first poser is like this. If you want to share, you can share in chat your answers. My first poser is, if I have and CGST and SGST, if I have taken this entirely throughout the year from April to March, and actually the credit was of IGST. So whether interest provisions will be applicable. So in my opinion, interest provision should not apply to this case for the reason that this is nothing but an input tax. And as I have just now told that input tax takes one color. You see section 16. Section 16 doesn't talk about CGST, SGST, IGST, etc. It just talks about the input tax. And therefore, all these are nothing but one basket. They are falling in one basket. And therefore, if I have taken wrongly a credit of from one tax in two tax or say taken credit of IGST, then it should not fasten me with an interest liability. This is what I think. Then, friends, let us understand what is charged on supply of goods and services. Now, what is charge means? Charge means what is there on your invoice, irrespective of rate. What I'm trying to highlight over here is like this: that suppose I am having, I am dealing in a commodity which is attracting 12% of tax, but on a conservative basis, I have charged 18%. Now, whether my recipient will be eligible to get input tax credit, of course, he will be eligible for 18% for the reason that the input tax credit definition says that whatever is charged on the supply of goods or services, that is input tax. So he will be eligible for input tax, though he has charged though his supplier has charged on a wrong rate. So it is not that he will be denied 6% to that extent is concerned. Now let us understand the third proposition over here. And the third proposition is a burning proposition, which I would like to highlight over here, is that whether my transitional credit is an input tax. So we are aware that we are receiving notices day in and day out for the transitional credit, and for basically for not transitional credit, disallowance of transit. They don't want to give us the credit of the transitional phase. Now let us understand the transitional credit. I don't find anywhere in the definition of input tax credit. So input tax. So in my opinion, except section 140, there are 142, etc. provisions are there, which is a separate chapter itself governing the input tax, governing the transitional provisions. But you will not find that input tax is covering the transitional provision. So what I want to highlight over here is that if you go to section 73 and 74 and 75 and you read it thoroughly, you will try and understand that all section talks about the input tax which has been wrongly availed or wrongly utilized, but none of the section talks about transitional credit over there. So I am fully aware that there is rule 121 which talks about the power of the authority to levy to assess the transitional credit. But friends, in absence of any power under the act, whether those rules can survive. Of course, at a later time, they can very well come with a retrospective amendment that is there. But then still, in my opinion, still the rule, though the rule is there, you cannot, I mean, the input tax credit cannot find its, cannot encompass in it the transitional credit. So this is the second issue, or second or third issue, which I want to bring to your kind attention. Now, friends, let us understand that what is reverse charge now? Now, the reverse charge is nothing but the tax which is paid by the recipient, where the supplier is exempt from paying tax for one or the other reason, and the recipient is paying the tax. So that also encompasses in the rule. That also comes into the kitty of input tax. And now, what is excluded is very simple. That the exclusion is all about the composition levy, as the composition person is already paying at a discounted rate and he is not supposed to collect charge separately. It cannot form part of the input tax credit for the person who is having his inward supply from the person who is governed under the composition levy. So the composition levy is not covered in the input tax definition. I hope we are clear over there. If any query is there, please unmute yourself and you can raise the query. So, sir, it is possible to unmute the participant immediately?
Yes, sir.
So if there is any query, you can raise a hand. There is an option of raising hand and you can raise a query if you want to speak. Or otherwise, I would...
Sir.
Yes, sir.
It is in chat box, sir.
Chat box.
Sir, let me read for you.
Sir, should we take query?
It's true that input tax.
Hello.
Sir, should
yes.
we take query in the chat box?
Okay, we will take at the end of the session. Fine enough.
Sir, if it is in chat box, we will take it at the end, or else if some member is asking, we will take immediately.
Okay, fine enough. Okay. So now I think the issue is very clear about the input. What is input credit to us? This definition, friends, is really very important for all the reasons which I have stated. Right. So the interchangeability between this CGST, SGST, and IGST, if that is permitted, see what portal is, whether portal is allowing or not, that is immaterial. We are discussing what are the legal provisions, and we are seeing a couple of decisions which have recently came regarding matching, unmatching of credit, etc., which really says that, and which are really eye-opener to us. Those legal provisions are really interpreted in a fantastic way in the favor of assessee. We will see those, and so this one of the definition of input tax credit is very much important. I'm having disturbance of. I'm not able to. Hello. Now now let us come to the provisions of the input tax which are there in the Act. I have just tried to summarize all the provisions, section 16 to section 21 and section 140 for the transitional credit, and the corresponding rules have been there. I have also dealt those rules over here. So this is only for a reference of all the participants. Now let us understand a very important section, section 16, right, which gives us, that is section 16.1, which talks about the input tax, rather the eligibility and the conditions for taking input tax. Now, friends, try and understand. Let us first read the bare section. What section talks about? So section talks about every registered person. So to avail an input tax, it is very important for a person to be registered. So you can't plan anything on the part of registration wherever doubt is there. For example, suppose you are dealing in a product which is under a brand name having a, say, 5% tax, and if it is not sold under a brand name, say DAPE, what we call it as, and it is not sold under a brand name, then it is exempted. So if you are having a bit of doubt in your mind that that whether this is taxable or whether it is exempted, then don't plan at all on the part of registration, because there are no provisions right now available for condonation of delay as those were there in the earlier act for obtaining registration. So unless and until you are registered, you cannot claim input tax. So the eligibility first condition is every registered person. So who is eligible to input tax credit is a person who is registered. Now, every registered person shall, subject to conditions and restrictions as may be prescribed. Now, just hold on over here. See what section 16(1) is and host of legal interpretational issues I will just put forward for your for the benefit of all the participants. Now, subject to such conditions and restrictions. So what section 16(1) says is there may be some conditions or restrictions. What is condition? Condition is if and but sort of thing, right? If you do this, I will allow this. So there are conditions which are there in section 16(2). So if you comply with all those conditions, input tax credit is available. So condition is nothing but an condition precedent. If you comply all those conditions, then you will be eligible for input tax credit or certain thing. And if you do not comply with those, then you will be out of the basket of the ITC. And certain restrictions. Now, what are restrictions? Restrictions are nothing but section 17 we talk about. So restrictions are nothing but blockages, or say rule 36, rules 86. All these are nothing but restrictions which have been put forward by the department. So all this, friends, all these conditions and restrictions should come from prescription. So should be prescribed. So what does you mean by prescribed? So if I go to the definition of prescribed, friends, you can see over here at last that prescribed means prescribed by rules made under this act or on the recommendation of council, right? So unless and until anything is prescribed under the act, having its set of rules, it cannot restrict your input tax credit. Now you will understand as I move forward why I'm emphasizing so much on this prescription and the manner specified under section 49. Now what is section 49? If you see section 49 talks about manner of utilizing credit, means how you can utilize for payment of interest, for payment of taxes, for payment of late fees. Now the flow of utilization, that is IGST, can be utilized against IGST, CGST, SGST. All those things are covered under section 49. So section 49 talks about manner of utilization, right? So the person shall be entitled to take credit of whatever he has been charged. Now let us understand this. I have already dealt with the person not eligible for credit, because if he is not registered, not eligible for credit. We have seen the supplier under composition is not eligible for credit. Then we will see this under rule 42, exempted and non-taxable supply. And agriculture is, they are saying that agriculture is also not eligible for credit, is as he is not covered under section 23 to obtain registration. So that is there vis-a-vis the agriculturist is concerned. So we have seen this. Now we are on this front. So every registered person we have dealt in detail. He has to obtain registration. Now my query vis-a-vis this is, that is every registered person. Now my query is whether if one place of my business, right, that what we call in general our day-to-day term is additional place of business. If that additional place of business is not registered, is not incorporated in the registration certificate, whether I will be eligible for input tax credit. In my opinion, friends, you will be still eligible for input tax credit for the reason that the section talks about eligibility of a registered person. It nowhere encompasses in it that the place should be registered or he should be having that additional place in his registration certificate, as it was there in the earlier regime of service tax, where central registration, centralized registration or decentralized registration were there. This is not there in the current regime, and therefore, if though you are you might be registered, but you may not have in place incorporated in your registration certificate, it will not hamper your right to claim input tax credit. But it is better always to incorporate it or get incorporated all the places that is there. Now, conditions and restrictions, we will, now let us move ahead, friends, and let us try and understand that what are the conditions and restrictions and prescriptions all about. Now, sir, now whether the person can claim credit prior to the registration, that we have dealt that no, he can't claim credit prior to the registration. Now, let us understand conditions and restrictions. Friends. Now, condition, I have told you that conditions means conditions which have been prescribed under section 16(2), and that we will look separately. And what are restrictions? Restriction, as I have already told, that these are blanket denial of credit, right? They are restricting your input tax credit blanketly. And condition means there is some procedural thing which if you are complying, you will be eligible for input tax credit. So in conditions, there is a possibility of getting a credit, right? If you satisfy those conditions, there is a strong possibility, or rather you will be eligible for credit if those conditions are satisfied. As against this, as against this, restrictions means restrictions are blanket denial of credit, which are under section 17, or restriction may not be blanket, but which may limit your utilization of credit, which is there under section 36(4), right? So this is nothing but conditions and restrictions. Now, friends, under this background, let us understand that whether credit to the restaurant or builder will be eligible. Now, try and understand, there is a rate notification 11/2017, wherein entry number 7 and 3 covers respectively restaurant and builders, which provides that provided that tax charge on goods or services used in the supplying of service has not been taken. And again, explanation is there, which is also having some condition attached to it. So this rate notification, friends, is trying to put some of the restrictions for availing the input tax credit, for a concessional rate of tax. Now let us understand what is the genesis of this. The genesis of this is, let us understand what is the preamble of this notification. The preamble of this notification is exercise of power conferred under section 9(1), that is section which talks about rate. Then section 11(1), that is section which talks about exemption. That then section 15(5), that section talks about valuation, and section 16(1). Now, friends, just tell me that 16(1), just we have seen right now, that nowhere gives power to prescribe any, nowhere gives power to notify anything. What it talks about is prescription. It does not talk about any notification. Then whether one can contain that this rate notification. And again, if we read further here, you will understand that hereby notifies that the central tax shall be levied at a rate. So at the most, for which this rate notification can give a conditions are nothing but the conditions for rate, and it cannot restrict the input tax credit, because section 16(1), though they are trying to cover over here a section 16(1), but section 16(1) is very clear. It talks about that anything which is prescribed, and prescribed means it should come under rules and it should not come under by way of notification, because we know that prescription is something different than that of notification, and both these things are already been defined under the act, and we have seen that, right? So if something which needs to be prescribed and government is trying to restrict your input tax credit by way of this rate notification, this will help to government. In my opinion, this will not help to government. Of course, you may have the concessional rate might be beneficial to you. That is leave apart. That is not the issue of debate. The issue of debate is that whether this rate notification can take away your input tax credit. In my opinion, it cannot take away your input tax credit. What can happen then if you claim an input tax credit? So there is a Supreme Court decision in HCL Limited which takes care of this, and which talks in the old regime it is, and which talks about that if you're not satisfying something, then you will be out of that notification. So the natural corollary of this will be you will be in the residual category. So it doesn't mean that you will be saddled with the of course you will be saddled with the notices, etc. But then again you will have a good case to defend that if you are your credit is sumptuous, and you feel that should not be restricted, then in that case one may take a call taking the, of course, analyzing the risk appetite of the client. One may take a call that I will come out of this notification by claiming an input tax credit, and I will charge full rate of tax and avail the full input tax credit. So this is there. So there cannot be a blanket restriction on this. Now let us understand, friend, we have used this term in the course or furtherance of business, intended to be used in the course or furtherance of business. Now let us understand what is business. Business, I know that this is defined. So friend, why the definition of business is important? You will see over here also again that I have tried to highlight important things. So in the course or furtherance of business. Now what is business? So if one refers to Malayalam plantation judgment, that is 53 ITR 140 Supreme Court, one can understand that there is no linkage of profit with your business, right? And we know from the definition of business also, irrespective of your volume, trade, frequency, whether it is for pecuniary benefit or not, you are eligible for input. That is a business. So in the same way, irrespective of volume, if the businessman finds that it is prudent for him to take to incur some sort of expenditure, and if there is a ITC on it, he is definitely eligible for full ITC. So in short, whatever is coming as an inward supply, first of all, that will go into the pool of section 16. Now let us understand whether there is a nexus, direct nexus required with the output tax. Friends, if you recollect, in the older regime, the wording was used in relation to outward services. Used in relation to outward services, these words are missing, and the definition and section 16 is much wider to cover all sort of business expenditure or all sort of inward supplies which are coming in the course or furtherance of business, and therefore there is no nexus. So of course, anything which you are incurring, which you intend which you are incurring for with the intent to conduct a business, that is prior to commencement of business also, if you are incurring some expenditure, then still those all will be eligible for you. Now you will ask, then what will happen for CSR, because CSR is prescribed under the Companies Act, and it has nothing to do with business. If you are doing something, then you are eligible, and your profit crosses certain threshold, then you are supposed to incur in CSR expenditure. So it is in post appropriation of profit, what we call as. So whether this is eligible. Now there are contrary AR, but then what, in my opinion, that since it is unless and until so it's a statutory obligation which has been fastened on me. So taking this and taking the recent AR decision in the Dwarikesh sugar industries, one will understand that CSR input tax credit is eligible. Forget about income tax, friends, because income tax, it is, as already told, that is appropriation. So no question of having deduction, and there are specific provisions also which will govern by the which will be governing those, right? But vis-a-vis that GST is concerned, of course, unless and until I incur this expenditure, I cannot be said to be complied with the Companies Act, and therefore I should be eligible for input tax credit on the CSR activities. So this is my humble submission with respect to the CSR activities. There is of course an debate ongoing. There are now recent AR, after considering the old AR, this AR is giving a favorable judgment. So in my opinion, we should be able to the input tax credit. Now let us understand, for friends, what is section 16(2), and I would require your attention over here, because this is very important section vis-a-vis section 16(2), section 16(4), mismatch, credit after 20th of October of the preceding financial year. What all those issues will be cropping up in this slide, in this one slide. Now let us understand, friend. See, section 16(1) talks about who is entitled to credit, and section 16(2) talks about entitlement of credit on satisfying some conditions. Now this condition, so see, the moment you are registered and all those in course of furtherance of business, the credit is eligible, subject to these conditions. So this condition may be condition precedent or may be condition subsequent. What I want to highlight over here is like this. Take an old regime's example of C-form. You were selling certain goods at a concessional rate of 2%, where the purchaser promised you to give C-form. Now tell me whether on the date of sale, whether you were having C form in your hand? No, it used to come very later at the end of the financial year or like that, right? So friends, still you were charging 2%. So what it is a condition subsequent. And if you try to see, try this fourth condition, it cannot be satisfied. Furnish return. म्हणजे काय की रिटर्न भरायचं का क्रेडिट घ्यायचं? रिटर्न आधी भरलाच जाणार नाही जोपर्यंत मी क्रेडिट घेत नाही, कारण ते क्रेडिट घेतलेलं मला त्या रिटर्न मध्ये टाकून रिटर्न भरायचं आहे. So therefore, this condition, what I understand is, except for the condition first, which is he should be in possession of tax invoice, debit note, etc. All this third and fourth condition, yes friends, second condition also are nothing but conditions subsequent, and that may be satisfied at a later point of time. Why I'm highlighting so much, you will understand as I progress. Now, friend, let us understand there's all these four conditions. So first condition is he should be in possession of tax invoice. Tax invoice means invoice which is prescribed under section 31. And again, if we go to rule 36, that says that only 5 conditions, major 5 conditions are: tax is charged, description of goods is there, value of supplies mentioned, GST is there, and place of supplies there. If these 5 conditions are there, forget about the n number of conditions which are there in the rules of tax invoice, you will be eligible for credit. So this 5 elements should be present. So while doing auditing also, you should ensure that all these 5 conditions, mandatory conditions, should be present on the tax invoice or the debit note before claiming the input tax credit. So, or such other documents. So what are all such other documents? So you can understand that in RCM under section 31(3)(f), there is a self-invoicing mechanism. Friends, unless and until you have a self-invoice generated for RCM paid, you are not entitled to take input tax credit. So don't take it lightly. Ensure that while furnishing your GSTR1 for every month or quarter, whatever is there, you file, if there is a liability for RCM, ensure that at least one invoice number is there in your GSTR1 to enable the client to get an ITC. So on the technical reason, he should not be denied of input tax credit vis-a-vis this in possession of the documents is concerned. Now, the second document, you will understand that in the course of import, you will be having a bill of entry. So that is also a document which enables you to take tax credit on an imported items. Now, friends, let us go to the receipt of goods. Now, receipt of goods, I have already told that these are all conditions subsequent. Now, practically what we are doing, I understand that practically what we are suggesting that unless and until the goods are received, we are not eligible for credit. But friends, this can't work for very reason that unless and until we presume that this condition are subsequent and not precedent, we can't work. Take an example of AMC. What will happen? If we say that unless and until the AMC, the period of AMC is expired, you can't claim credit. Is it so? So I don't think that this is so, because for the reason that all these are conditions subsequent and those are to be interpreted accordingly, as already explained. So, so I have answered also one query over here, that whether I will be eligible for the prepaid expenses credit, right? The expenses which I am showing as in prepaid. So in my opinion, those you will be very well eligible for all those inputs, goods and input services, though you may classify them as in prepaid expenses. Now, let us understand that receipt of goods needs to be established. Now, this is very important, friends, as far as the allegations of the fake invoicing is concerned. So try and understand that receipt of, and it is actually e-way bills and now linking of toll booth, etc. with this e-way bill website, etc. This is going to help us in goods at least, but how to establish this in the case of services? So in my opinion, vis-a-vis you are having your purchase or the service requisition, then the order placed for availing a service, then the invoice, the payment, all this will at least suffice or should suffice that that you are having a good you have made an supplies. Friends, why I'm saying so is this, that there is a case of Good Earth Steel. You can note down a citation: Good Earth Steel Private Limited 218-9 GSTL 177. So this case says that if the subsequent sale is not challenged, म्हणजे जर तुम्ही विक्री केलेली गोष्ट चॅलेंज करत नसाल तर मग परचेस केलेली गोष्ट कशी काय चॅलेंज होऊ शकते. म्हणजे थोडक्यात मराठीत आपल्या म्हण आहे की आडात नाही तर पोरात कुठनं येणार. इफ यू हॅव नॉट परचेस्ड हाऊ कॅन यू सेल, अँड इफ यू हॅव सेल and the assessing officer, if you have sold and the assessing officer is not challenging your sale, then how he can say that you have not procured this thing, right? So this will help us to substantiate the services as far as the fake invoicing is concerned, right? To some extent I'm trying to address how to deal with the department, right? Now the third condition is, friend, very important. It talks about payment of tax by the supplier. Now just tell me, friend, where the word of matching of input tax credit is there over here. Is there any word you find over here? You just go to the bare section also, you will see that there is no word of matching in this condition. So what I'm trying to highlight is it is enough that the supplier pays the input tax, pays the tax to the credit of the government. That will suffice, and he will be, the recipient should be eligible for the credit. Now, for this recently, there is a decision in, I think, I'm just forgetting the citation. I will just come back with the citation also. Recently, there is a decision which talks about that if there is a mismatch of there is a mismatch of credit, or the supplier has not paid, basically not mismatch, if the supplier has not paid the tax, then still you will be eligible, or you should be given an opportunity of being heard, and unless and until that opportunity has not been given, you can't blanketly disallow. So my submission to this is like this, that if the supplier, if there is no concept of matching in section 16.2, and therefore blanketly it should not happen that I have been deprived of my credit eligible. Then the fourth condition is, friends, is of filing of return. So whose return? The return of the supplier or return of the recipient? I am a recipient. So of course it talks about returns of the recipient and not returns of the supplier. So unless and until I furnish the return, I can't avail an input tax credit. And this has to be read harmoniously, right? So what I understand is all these, and further to substantiate this, that these three, which I have right now dealt with, are condition subsequent. One can see that all these are nothing but an anti-avoidance condition, right? So these are anti-avoidance conditions out of rule, and therefore it is very much that I will be eligible for credit if though I come later on satisfying all these conditions, right? Now, sir, now friends, now let us move ahead and try and understand the new proposed amendment which is in front of you. And I don't know, let's wait for the notification to notify the same, and soon it will be getting notified, right? So friends, this new amendment says that the ITC, and it will be really challenging, friends, to see how this amendment is incorporated, right? Because now whatever we have discussed right now, this is taking all things away, right? Everything they have taken away, that the things of condition precedent, condition subsequent, possession of tax invoice, payment made by the supplier, everything is kept apart. And what they are saying is you will be eligible to input tax credit if and only if that is appearing in your 2A or 2B. So how this develops, one will really have to see, and this is definitely going to create a chaos right now. How this, whether any rules will be prescribed for this, let us wait for this. But this condition, you will have this subsection, if inserted, will be really a draconian provision, which is not going to help us, whatever we have discussed till now. Right now, friends, let us move ahead and try and understand that what section 16.2 explanations talks about. Now let us go to the first explanation. Friends, first explanation talks about that if your goods or services are received by your agent, don't worry. So it talks about all bill to or ship to transaction, basically, or your goods or services you are not directly receiving, but you have directly sold this to the third person, and those goods have never entered your factory gate. Don't worry, this explanation is there because we have just now seen the condition that you should receive the goods. So this explanation is saying that it is deemed that you have received all those goods or services, and also FAQ is there on this of 31st March 2017. This clarifies the same position that this will be deemed that you have received the goods or services, though they are directly moving to the agent's place, or though they are moving directly by way of transfer of title in the document of goods, right? So this is their vis-a-vis the goods is concerned. Then they came with an amendment. What about services? For example, on my behalf, you are giving services to the third person. So whether it will be deemed that I will be received. So to avoid any conflict, they have inserted from 1st February 2019 a second proviso to this subsection 6, section 16.2, which takes care about the services, which says that services it shall be deemed that the taxable person has received if those are received on the direction to the third person directly, right? Or if those are provided to the third person directly. Now, friends, let us understand the most controversial issue, that is 180 days credit. Right, reversal in case of 180 days. Now, first of all, let us understand what the bare section talks about. Bare section talks or says that, and try and understand what things I have tried to highlight. Right. So the bare section talks about where recipient fails to pay the supplier of goods or services within 180 days of issuance of invoice by the supplier, then what will be the consequences? So if the supplier doesn't pay, so if the recipient doesn't pay to the supplier within 180 days, then the consequences would be he will not be eligible to, or he will be required to reverse his input tax credit, right? So now, friends, let us understand. And now what will happen? So if one reverses the input tax credit, of course, he will be saddled with an interest liability from the date of availing of input tax credit till the date of reversal, right? And yeah, friends, I have just recalled the citation of that mismatch of credit, that is DY Bethel Enterprises. You can note down, it is Madras High Court decision. So this talks about mismatching of credit is not a condition, right? So now let us come to this. So interest will be payable at 18%, and after you pay that vendor at a later point, you will be eligible to reclaim this credit, right? So the payment of supplier is there, and this and if you see the rules, it does not cover the input tax credit which is there under reverse charge. So if there is an inward supply, you pay tax on under inward supply under reverse charge. On inward supply under reverse charge, there is no requirement for reversal if you do not pay it within 180 days to the vendor. But if you are having a tax invoice and if you do not pay within 180 days, then there is reversal provision. Now, friends, try and understand the word which I have highlighted over here. The word which I have highlighted over here is nothing but fails to pay, right? Now, let us understand what is fails to pay. Fails to pay is nothing but an contractual obligation of failure, right? It is not an factual or actual obligation, failure on part of pay. What does I mean to say is, when your contract talks about that you will pay me after 180 days, after 120 days, after 160 days, then your time limit for 180 will start from that days. That is, it will be governed by your contract. So basically, it's a contractual obligation. It is a contractual failure. If that is there, then the reversal provision will be applied, not from the first day, right? As against this, if you are able to recall the SENVAT provision, those we are talking about the do not pay. So do not pay means irrespective of your contract or your contractual obligation, that is an actual thing, right? So if you do not pay from the date of invoice within say 180 days, then credit is not allowed. But this is giving much relief, especially in the COVID period. If you are having more credit period with you, then one can say that 180 days provision will apply from a later point of time, right? Now, friends, actually, really speaking, let us try and understand that whether this 180 days provision will be applicable to RCM. Some issues which I have tried to highlight. So first, RCM, as the rule itself says that this does not apply to RCM or imported of RCM. So that is out of scope. So it cannot apply 180 days. Now, for import of goods, the import of goods, the levy is under Customs Act. and not under the IGST Act. And only the collection mechanism has been prescribed over here for the sake of input tax credit, etc. So this 180 days test also doesn't apply for the import of goods on which we are paying tax under reverse charge mechanism. Now, what will happen to does not pay, we have dealt. That does not pay is not a word. Here is fails to pay, the wording is. So it is more based on contract than on the actual, right? So now let us understand what will happen to retention money or the credit period. Just now I have explained. What will happen to retention money? Retention money, again, those will be as per your contract you are retaining, and therefore, in my opinion, the reversal of input tax credit should not apply to the retention of money, money which you have been retained under the contract, right? So here we have a case of Hindustan Zinc of Supreme Court, which talks about that wherever restrictions, wherever restrictions are based on your contractual obligations, that cannot, the section cannot override all those. So you have to take into consideration this 180 days test based on the contract. Right. Now, what will happen to book adjustment? Book adjustment, we generally call it as an journal entries, right? So, if I'm not wrong, there is circular 122 by 2010 of board, which says that it is of course an old regime circular, which talks about that you will be allowed, or it will be deemed that you had made a payment though there is a journal entry passed, right? So that is there with respect to book adjustment. Now, what will happen to schedule 1? And this we have dealt, the other one. Now, what will happen to schedule 1 supplies? Friends, and under schedule 1 supplies between related parties, or supplies where basically the supplies without consideration or not wholly the consideration is attached, right? So in that, for example, branch transfer, right? So this also, if I am supplying to my
I think there is network issue from Ravi Rathi side. So once sir will join, we will start with the session. We will start with the session shortly. once Ravi sir joined the session, it is network issue from Ravi sir's side.
Are you able to hear me? Soil, are you able to hear me?
Yes, sir. Yes, sir.
Yes,
There was some technical issue. I mean, suddenly due to the change in weather, I will not be able to share now presentation because there is some light fluctuation issue going on, and therefore I think the BSNL line is down, and I'm right now interacting with you through my mobile. So in any way,
Not an issue,
now
sir.
let
Not an
us.
issue. You can go with mobile.
I will directly. I'm sorry that. I will ensure that if you want, I can just mail you slide later on. But now let us continue with the topic itself, right?
Yes, sir.
Right. So we were on the issue of 180 days. If it is, hello. We were on the issue of 180 days, right? And
sir, you are audible.
yeah. So, and we were discussing whether the failure to make any payment, we have already discussed all those nitty-gritties of the failure of making payment. We were on the part of recredit, right? So, vis-a-vis this recredit is concerned, friends, there is no restriction under the Act. So, screen sharing is not there for the reason that there is some technical issue. I am talking with, I am on mobile. So, I'm sorry about that. But I'm unable to share. There is a failure of BSNL line at my end, so I'm unable to share on the screen which is there on my laptop. So I'm right now talking from mobile. I will be unable to share the screen. So friends, now let us go to the reclaiming of credit. So there is no restriction vis-a-vis reclaiming of credit is concerned, right? So as there is no restriction for reclaiming of credit, you can claim that credit whenever you make a supply to the whenever you make a payment to the supplier, right? So now friends, try and understand the analogy which we are trying to draw over here is like this, that this failure to make payment, right, is basically a contractual obligation. Now, let us go to the second part, right? Second part that says about is like this, that you will not be eligible to, so again, this is a restriction, right? So that says that you will not be eligible to claim the input tax credit if you have capitalized that and you have claimed depreciation on that credit. So one of the condition, one more condition which needs to be satisfied before claiming an input tax credit vis-a-vis your ITC is concerned for capital goods is that you should not claim depreciation on your input tax, right? Now let us come to this was section 16.3. Now friends, I want your complete attention. I'm sorry that there is no PPT available. I'm trying to connect. If it is connecting, I will let the host inform. Friends, now very important section is section 16.4, which we were trying to discuss, and we were saying yeah. Now I think you are able to hear me. The power is on again, so I will be sharing screen also, right? So friends, we were on the we were right now discussing the next slide. Are you able to see the slides also right now?
Not yet, sir.
Not yet, sir.
Okay, fine. I think now it is okay, right?
Yes,
sir, yes,
yes.
Okay. So now we were on the this slide we have completed section 16.2. Now let us come straight to the section 16.4. And section 16.4 is really a tricky section, and day in and day out this section is troubling us, right? So what this section tries to say is, this section says that you will not be entitled to input tax credit after 20th of October, that is our annual return filing, whichever is earlier. What I mean to say over here is like this, that filing for return under section 39 for the month of September following financial year, or furnishing of annual return, whichever is earlier, till that time frame only, you will be eligible to the input tax credit. Now, this is second. Now let us understand whether this really works or whether there are now, friends, try and understand the interplay between section 16.2 and section 16.4. Now, friends, Section 16.2 says that first you need to file a return. Now tell me friends, if I need to file a return first, my first submission for non-applicability of section 16.4 is like this, that unless and until I file a return, how can you deny me an input tax credit? Right? This is very simple, that you are aborting a child before its birth. You are aborting my right before it is taking birth. Right? So unless and until I am eligible to file, I am filing my return, section 16.2 says that I can't avail the input tax credit. Right? So the very right is taken away by section 16.4, and in my opinion, this cannot happen. Right? So section, and this is for the reason that if we see section 16.2 and 16.4, and if we harmonize them and read together, you can find that section 16.2 is starting with a non-ostensible clause, right? So this section 16.2, which says that you will be eligible for input tax credit, is overriding section 16.4. And therefore, the second submission is that since it is having a non-ostensible clause, section 16 is having a non-ostensible clause, it cannot take away my right to claim an input tax under section 16.4 by putting some restriction. The third thing is, if you carefully read section 16.4, you will understand that section 16.4 talks about taking of input tax credit. It doesn't talk about availment of input tax credit, nor it talks about utilization of input tax credit. No, so what you are talking, you will say, what is taking of input tax credit? Taking means taking it. No, friends. If you see section 16.1 carefully, again, I am again bringing that screen in front of you. If you see this, then it talks about taking of input, to take. Right? If you are able to see the highlighted words, it talks about taking of input tax credit. So definitely, if the act at some places uses the word taking, at some other place it uses the word availing, at some other third place it uses the word utilizing, these all words definitely carry some different meaning. They are having their own meanings. And in my opinion, the third submission for this would be like this, that since the section 16.4 is talking about taking of input tax credit, taking vis-a-vis taking in the books of accounts and nothing else. So if I am eligible, I am able to prove that I have taken input tax credit within this time frame in my books of accounts, in my opinion, this should suffice and you will be eligible for input tax credit. But the fourth is try and understand, if I go to section 37 to 43, all this, friends, this and this slide, both slides, this is 17-18 specific and this is generic, right? This explanation, right? So if I go to sections 37 to section 43, all these sections are talking about the manner. These sections prescribe the procedure for credit. So this talks about you take input tax credit under taking of input tax credit is there under section 35. 35 refers to records, right? So once I have taken an input tax credit in the books of account, the credit will be then reflected in the return, right? So I am highlighting all these sections. What is the procedure for claiming input tax credit? So taking an input tax credit in the books of accounts is different than reflecting a credit in a return, which is again different. That this credit, once it is reflected, is nothing but your provisional credit, right? It is not your final credit, and your final credit will be only there when this credit is matched. So unless and until the matching is done, you can't say that this credit is final. And till date, friends, there is no 2, right? So GSTR 2 is in abeyance, GSTR 3 is suspended. So where is the matching principle? Where is the matching thing which has been prescribed under the Act? There is no matching which has been prescribed under the Act, and therefore you are availing right now also the credit which is a provisional credit. So if it is a provisional credit, where is the question of disallowing that credit or not allowing me after a certain period of, say, 20th of October after the end of the financial year? In my opinion, that is not a reasonable interpretation, right? So this is the fourth thing which I would like to highlight, that this is the fourth thing, that there is a concept matching which is absent, and therefore, and again, in absence of GSTR 2, you cannot you cannot restrict me that you will be not eligible for by section 16.4. You cannot restrict my input tax credit eligibility. So this is my humble submission. These are all the 4 or 5 points which I have tried to highlight it. So law cannot see that something which is impossible. What I mean to say is like this, that unless and until I file a return, where is the question of claiming credit? So, and then taking this ahead, if I go to section 17.12, that says that I'm permitted to file a payable return, but your GST system is not allowing me to file a return unless and until I pay the tax. So there may be some genuine hardship, say due to COVID, I am unable to file. There are financial crunches. So therefore I am not able to. I am very well eager to file my return because I don't want to get into another nitty-gritties of the law. But then where your system is permitting, your system is not permitting to file me payable return, though the rules and the act, as I have just pointed out, that section 75.12 says that payable return is permissible, but your system is not allowing. Therefore, this is impossible. How can I file my return? So once it is impossible to do thing, then you cannot at one end say that you do this thing or you don't do this thing. I will carve out your rights. So this is my second or the fourth or fifth submission on this. Therefore, in my opinion, right now also, since the matching principle, since the provisional credit, since the interplay between the sections 16.2 and section 16.4 are there, one should not be deprived of the credit, even if claimed after 20th of October of the succeeding financial year. This is my humble submission. I am fully aware. So, there was a press release which I have referred to also, and this press release was challenged by App and Company. There is a Gujarat High Court decision which says that 3B is not a return, and then they have brought a retrospective amendment to it. So there is a separate issue whether this retrospective amendment will sustain or not. But then can you? This retrospective amendment saying that 3B is a return, this cannot again say that since 3B is a return, you are not eligible for the credit, for the very reason that still there is no matching provision, still there is interplay between section 16.2 and 16.4, and therefore you will be entitled to input tax credit, though this time limit has been lapsed. This is my humble submission for all of this. Now let us come to section 36.4, which says about restricting your input tax credit, right? So this is one of the restrictions. So conditions and restrictions we are speaking about under section 16.1. So one of the rule is section 36.4, which talks about which says that your input tax credit will be restricted to the extent of 20%. 20% was from 9th of October 2019. 10% was from 1st January 2020, and I think 1st January 2021 they have brought down to 5%. So the 5% to the extent of your match credit, you will be eligible for unmatch or the actual unmatch, whichever is less, right? So what simple thing is like this, that if your total credit is 100, you are having 80 rupees as your match credit, then 5% of 80 rupees will be added to your input tax, and to that extent only you will be eligible for the input tax credit, right? So in this situation, you will be adding just 4 rupees, and 84 will be your eligible credit, and 16 rupees you can't claim. Now this is there vis-a-vis this rule 36.4 is concerned, and due to the COVID situation from February to August 2020 return, they have said that all this will be cumulatively applicable to the September return, right? So from September, cumulatively means you can claim all input tax credit in February, March, etc., irrespective of this unmatched credit, which is appearing in 2A, right? So you can claim everything, and you will be applying this restriction only in the return for the month of September. Now, friends, the moot question is whether section 36.4 is constitutionally valid. Rule 36.4 is constitutionally valid, because we know that that there is section 43A, the draft section is always in front of us. Was in front of us, right? So which says that brings out this restriction, but section 43A is not yet came into force, and therefore whether this rule can survive, this is the moot question. And in my opinion, though this section this is the specific section which will be then taking care of section 36.4, right? But this section has not been notified, and therefore still, in my opinion, section 16(1) gives the power. It gives the power to restrict, to give some condition on to restrict your input tax credit. And in my opinion, therefore, though the section 43A, which is more specific, is not on, because what the assessing officer will say on the other end, see, fine, there is no section 43A, fine enough, but section 16 is there to cover your case. So in my opinion, though section 43A is not notified yet, rule 36(4) will be very well be valid, and we will have to comply with this rule. Now friends, now practically what we have done, whether we have really looked into while going through the audits, etc., I don't find that we have looked into these things in audit, right? So at least to safeguard, we should give a note that say maybe that in my opinion, so and so has not been notified, and therefore this is not available, or otherwise one can say that this section 36 is not deriving its power from section 16, or second sort of argument will be like this, that section 36(4) is taking away my utilization right. See, what utilization right, what I mean to say is section 16(1) and 2 gives me the right of availing a credit. They section 16(1) does not prescribe for putting off a restriction on utilization. So how can you put a restriction on my utilization? So there can be one of the argument like this, but still this will be a very critical issue to examine as the time progresses. Now again, there is new rule which was inserted. Rule is 86A, which says that every registered person who has found non-existence, right, or who has avail input tax credit without receiving of goods or services, or the tax charge in respect of these goods or services have not been paid by the supplier, or the person availing the credit is not conducting business from the place of where he has obtained a registration, or he is not in the possession of his input tax, his tax invoices, then the department can block his credit. Now, whether friends, blocking of credit, right, whether section 49, if I am not wrong, section 49 deals with the manner of utilization of credit, and whether one can say that manner of utilization of credit is equal to the manner of blocking of credit. In my opinion, no, and therefore this is given a tremendous power to the assessing officer, right? So in my opinion, this needs to be tested by the time, right? And one will have to take a cautious call. Of course, that blocking will be valid for 1 year, etc. If you go to rule 86, you can realize it, right? So that is there vis-a-vis rule 86 is concerned. Now coming to rule 86B, now recently this 86B has been inserted, and that talks about restricting the use, right? So again, this basically will be really a challenge to see as to, hello.
Yes, sir, audible.
So there will be a restriction. There will be really a challenge to see as how this program. Are you able to hear me?
Yes, sir. Yes, sir.
Yes, sir, you are audible.
Okay, fine. So now this restrictions on use of, rule 86B we were talking about, and this rule says that notwithstanding Yeah. So now let us go to the next slide. The screen is not shared. Can you allow screen sharing? I think.
Yes, sir. You are co-host. You can share the screen.
No. Is it okay? I think it was blocked.
Yes, sir. It's visible right now.
Okay, fine. Now let us come to the next slide or next concept. We have already seen Rule 86B, right? So the restrictions we have already seen. Now let us come to apportionment. Before apportionment, let us come to block credit. I will just rush through the block credit and I will then come to the apportionment of credit, because apportionment is also very important, right? Block credit, we all know that there was an amendment in section which was there in February 2019, and that amendment has said that amendment has modified many of the subsections of section 17.5. Now the first subsection is you will not be entitled to claim any input tax credit vis-a-vis your motor vehicle is concerned. So, and not only that, they have now tried to plug in the insurance charges or repairing or maintenance charges paid for the motor vehicle. So with respect to motor vehicle as well as with respect to the vessels or aircraft, this restriction applies in all the way unless and until these are made for further supply or used in transporting of the passengers or imparting driving or flying or navigations, etc. Right? But from apart from this, friends, try and understand that this is very important change which they have brought. Previously, the passenger vehicle which was having a seating capacity of more than 13 was not eligible. Right now, they have tried to cover this by saying that motor vehicle having seating capacity of less than 13. So, apart from transport goods, etc., passenger vehicle having seating capacity of more than 13, including driver, will be eligible for input tax credit. Now let us try and understand the other blockages. The other blockages are basically food and beverages, outdoor catering services. Now let us understand what is food and beverages. In a common man's or layman's parlance, if one has to understand what is food, so one can say that which is readily eatable, right? So can I say that sugar is a food? Can I say that the tea powder is a food? Can I say that milk per se, which is not which is in a bag and which is not heated, etc., it's a food? In my opinion, no. And therefore, unless and until that food, all these things are, I mean, tea powder, etc., are mixed together to have a cup of tea, it can't be said that it is a food or beverage, right? So, in my opinion, so unless and until these things are put together, if you buy them separately, still you will be eligible for input tax credit. This is what it appears from the word food. Because you now, what will happen, friends, to the restaurant bill? Can one draw an analogy that food and beverages, all this refers to goods and not to services, and whatever restaurant is, it's a deemed service, right? So I think it will be a litigative proposition, but will really needs to be tested at the time as the time progresses. But one will have to keep in mind that this may be one of the interpretation vis-a-vis the food and beverages is concerned. Now, what with respect to outdoor catering, there is a bar. We know that whenever conferences are arranged, the first question is whether I will be eligible for credit. Try and see that it is a composite supply vis-a-vis the providing a space is concerned for having a conference, as well as imparting a food, right? So if we put all this together, it's a composite supply where the principal intention is to have a conference, right? So this is an ancillary thing. So in my opinion, in those cases wherever this sort of things are there, you will be eligible for input tax credit. Now, next further blockages are beauty treatment, health services, cosmetic and plastic surgery, or renting and hiring of motor vehicles, life insurance, health insurance, etc. All these are blocked unless and until those are used in further making an outward supply, right? Then the membership and club, it's a blanket denial. So it is not that it should be further supplied. You might be supplying, then still the denial is there. It does not talks about supplying further, right? Then the travel benefits extended to the employees on vacation, such as leave or home travel concession, those are also under the negative list, unless and until government says that it is obligatory on an employer's part to provide such travel benefits or leave travel vacations to the employees. So these are under the block credit. Now, the most important category of block credit is credit works contract, which is used in the construction of immovable property, resulting into an immovable property other than plant and machinery, or goods or services which is received by a taxable person for construction of an immovable property other than plant and machinery. So wherever plant and machinery is there, fine enough, you will be eligible for input tax credit. But wherever construction is there, now we will try and see the definition of construction, right? So wherever construction is there, you will not be eligible for input tax credit. Now, what is construction? Friends, construction means reconstruction, renovation, addition, alteration, or repair to the extent capitalized in the said immovable property. So if the expenditure is capitalized, if it is your capital expenditure, and of course you will have to follow the accounting standards laid down by Institute of Chartered Accountants of India. So it is not that this is a blanket exclusion. One will have to take a call based on the accounting standard prescribed. If the expenditure is capitalized, which has resulted into immovable property, then you will not be eligible for input tax credit unless and until you are further supplying it, right? But to the extent it is capitalized, you will not be entitled to credit. To the extent it is not capitalized, you will be entitled to take the input tax credit. And again, plant and machinery is also been defined. So plant and machinery includes or plant and machinery means apparatus, equipment, pipelines, and machinery, and includes the foundation as well as the structural support to that plant and machinery. So if a plant is there which is having a huge, for example, a crane is there which needs the girdles to be installed, and unless and until those girdles are there, that crane cannot function. So it is integral part of that machinery, and therefore, though that is permanently fixed up or fastened within earth, right? Still, you will be entitled to claim the input tax credit vis-a-vis that those girdles are concerned. So one will have to really take a call as to what is meant by plant and machinery. One will really have to keep in mind the decision of if I'm not wrong, the Taj Hotel, where they have said that all the sanitary system, etc., is also in plant and machinery vis-a-vis the hotel is concerned. So one will have to take, or one will have to keep in mind all this call while interpreting a word plant and machinery. Now, friends, try and understand also one more important thing, that they have restricted input tax credit vis-a-vis the telecommunication tower pipelines laid to the extent they are outside the factory. So the situation is like this, that if you are bringing a water pipeline in your factory, then to the extent the pipeline is outside your gate, you are not eligible for credit. And the moment the pipe enters into your gate, to the extent the pipe is in your gate, on those inputs you will be eligible for input tax credit. So one will have to really take a conscious call. One will have to really bifurcate in his books of accounts. One will have to integrate or have a robust accounting system while deriving or while determining the eligibility of input tax credit vis-a-vis this pipelining, etc. is concerned. Now let us see all other blockages of credit. Friends, section 10, we know that there is a composition levy you are not entitled to claim. So any inward supply which is there from the composition dealer, you will not be entitled to claim credit. Then the tax paid by non-resident taxable person, except on imports, he is not entitled to claim credit. Then used for personal consumption, anything which is not in the course or furtherance of business, you will not be entitled to claim input tax credit on those goods, right? Then the next is goods which are stolen, lost, destroyed, written off, or disposed of by way of gift. Now, or free sample. Try and understand, friends. Here are the words which refers to gifts and free sample. If one applies the principle of is jus generis, one will have to look at with respect to disposal or destruction. So if those are gift in the course or furtherance of business, those are a free sample and those are not destroyed, right? Or disposed of while shutting down a business, for example. So if those are not gifted to the employees, if I'm closing a business and I'm gifting it to employees, so these are not the cases, right? So if the gift is in the course or furtherance of business, it is a sales promotional activity, then of course, in my opinion, that will qualify for input tax credit. So one will have to really take an example of Diwali gift, which we are giving, right? So this is day in and day out we are facing. So whether that will be eligible for input tax credit, in my opinion, it will be eligible for input tax credit if they apply the principle of is jus generis, because it's a gift which is not linked with disposal of the things, right? So one will have to check it vis-a-vis the real nature of the transaction or the expense or the inward supply is concerned, right? So now the next is, if there is section 74 action, that is you have willfully suppressed anything, then the recipient, if receives the debit note for all this, kya hoga? Suppose, for example, there is a sister concern. Now there is a liability and you pay that liability under section 74. And now you say that it is tax neutral because just I will raise a debit note on my sister concern, and because I have made a supply to that sister concern first and recoup that. So after this section 74 action, you will not be in place to recoup that. So your sister concern will not be also in a position to avail the input tax credit. So these are all restrictions you will have to keep in mind while dealing with. Now let us understand this some questions or some posers. Pick up and drop facilities to employees, generally no, because it is not prescribed under any act, etc., and it is falling under section 17(5)(b)(1). Then food, I'm referring to food supplied to employees, right? So that is also a blanket exclusion under section 17(5)(1), 17(5)(b)(1). Then medical health kits, etc., that is also under a blanket exclusion. Group insurance of an employee, that is also generally no. But security expenses incurred for staff quarter, yes, you will be eligible for credit. The expenses or attires or uniforms, etc., given to the employees or the directors, etc., of course you will be eligible for credit. The insurance of the staff quarter, etc., you will be eligible for credit. So one will really have to interplay between the perquisite provisions of the Income Tax Act as well as the ITC provisions of under section 17(5) of the GST Act. Now, very important, and the last part of last or second last part of my presentation is the reversal of credit. Now, section 17(1), friends, talks about general things. It talks about that no input tax credit will not be available, or you will have to restrict your input tax credit vis-a-vis it is for the other purpose, right? So wherein goods or services or both are used by a registered person partly for the purpose of business and partly for other purpose, to the extent of other purpose, he will not be entitled to credit. Now, what is other purpose? That is also not defined in the Act. So what we interpret is like this, that it is a personal element or personal expenditure. So one will really have to take a call from his income tax returns as well, so that whether any disallowance has been made in computation of income as a personal element. So one will have to take a call also while filing his annual return in 9, or maybe an audit for next year 9C, at least for next year, I should say. Now, so this is there with respect to the apportionment of the other purposes is concerned. Now, the very important is ITC vis-a-vis the exempted supplies is concerned. So the section 17(2) and 17(3) talks about the exempted supplies, right? So try and understand, friends. Section 17(2) fastens in liability for reversal, and section 17(3) is just a procedural section which describes how to reverse and says that as the rules may be prescribed, right? So the reversal, genesis of reversal for common input tax credit comes from section 17(2), and section 17(2) just talks that where the goods or services are used by the registered person partly for effecting taxable supplies, including zero rated supplies, and partly for exempted supplies, then his credit will be restricted to the extent attributable to the taxable supplies, right? So here they are nowhere talking about the sale of land, sale of securities, etc. So what I mean to, why I'm trying to bring over here is that because all these items are falling under Schedule 3, or they are not supply. Goods does not, if we go to the definition of goods, it does not include securities money. If we go to the definition of services, it does not include security money. So, or if we go to Schedule 3, it does not include sale of buildings, lands, etc. So if section 17(2) is not talking about the inclusion of these categories of supply in it, how come section 17(3), which is prescribing the procedure for reversal, can encompass this? So in my opinion, if really speaking, though there may be an exempted supply vis-a-vis Schedule 2 or vis-a-vis Schedule 3 is concerned, or Schedule 2 is concerned, Schedule 2 para clause B of para 5 of Schedule 2, that is building, sale of building, etc., or sale of land or transaction in security is concerned, those should not be counted in calculating the exempted tax turnover. This is what I mean to say by this, because 17(2) does not talk about this all things to be included while calculating. 17(3) is a mechanism of calculating. 17(2) is a liability for reversal. So 17(2), unless and until that talks about, I should not take all this as an exempted supplies and reverse input tax, reverse common input tax credit on these supplies as well. These supplies vis-a-vis the sale of land, etc. is concerned. So hope I am clear on this issue, right? So now coming to the banking sector have been given in 2 options. Now, friends, before coming to banking section, let me take you through a practical example of reversal of input tax credit. Friends, I am sharing here an Excel file. Are you able to see? Just anyone can please confirm. Are you able to see this Excel calculation of reversal? Okay, fine. Thank you. So now let us see step by step how the reversal is taking place. So friends, I am determining my gross turnover. My aggregate turnover for the year has exempted supplies of say 5 lakhs, and aggregate turnover for the period is 15 lakhs. Now my total ITC, irrespective of reduction, etc., irrespective of blocking, etc., my total ITC on my inward supply is say 11,000 rupees. Out of this, suppose I am making 180 days reversal, keeping all those aside, practical approach, I am making 180 days reversal in small cases, right? So, or there is a failure also. One can say that there is a failure and therefore one has to make an reversal of 180 days. So I'm taking this 1,000 rupees. So I will reduce this 180 days 1,000 rupees over here. So my balance input tax credit is 10,000 rupees. Out of this, other than business, that is input tax credit for other purposes is 1,000. Then I will reduce that also. Then input tax credit vis-a-vis the exclusive exempted supplies is concerned, I will reverse, or I will reduce that also. So that is 1,000. Then input tax credit vis-a-vis blockages is concerned, that is say 1,000 rupees. I will reverse that also. So what I am trying to do over here is I am trying to arrive at a common input tax credit for reversal purposes. So I have taken gross input tax credit. I have reversed all the credits which is either directly not eligible due to negative list or having non-business purpose, or which is relating to the exempted supplies other than zero rated supplies, but including RCM. So I will reduce all this input tax credit, and so my input tax credit boils down to 7,000 rupees. Out of this, my total input tax credit, which is directly attributable to taxable supplies or zero rated supplies, is 3,000 rupees. So this is fully eligible. So this is nothing to do with reversal. So I am reducing this 3,000 also over here. So my common input tax credit then works out to rupees 4,000. Out of this common works input tax credit, if you are eligible to see the formula, I have applied the formula that my exempted supplies are 5 lakh. So this common input tax credit 4,000 divided by 50 lakh, that is aggregate turnover into the exempted supplies turnover. This is very simple. And so this is the common input tax reversal which I am arriving at. Now, friends, let us understand what is non-business purpose. So non-business purpose, irrespective of this common input tax credit, we have understood, and the rule specifically says that for non-business purpose, you will have to reduce 5%. And I'm sure that no one of us is making this 5% reversal, which is mandated under the rule. Rule says that forget about your input tax, common input tax credit of identification, applying the ratio, etc. In any case, you will, in addition to the common input tax credit, which you have identified based on your turnover, you will have to reduce this 5% as eligible input from your common input tax credit. So the input tax reversal based on for the common input works out to rupees 600, that is 400 plus 200. And if I reduce that, then the eligible ITC is 3,400. How it is 3,400? So 4,000 to the extent of the common input I am talking. So eligible ITC, if I really one wants to work out, then it is 3,400 plus this 3,000, right? So eligible is total 6,400. So this exercise you need to do for every return period, friends. So every tax period, the word talks about tax period, and what is tax period, that is also defined. So for every return, you will have to do this exercise and you will have to reverse. Now what will happen at year end? Year end also, friend, please note that this input credit, this reversal of input credit has to be applied monthly only. It is not that you will derive an annual ratio and then apply. No, you will have to separately calculate for April, May till March. You will have to just check whether the input reversal which you have made earlier is right or not, or if there is any shortfall, you will make reversal of that. And if there is excess, you can re-avail that credit if reversal is made excess. But this exercise has to be made for every return period, and annually also you will have to make for every return period only, and not on the annualized basis. Hope I am very clear on the reversal part of a common input is concerned. Same thing applies to fixed asset. Only fixed asset, what they are saying is we will treat the fixed assets time period as 60 months, that is 5 years. So for every quarter, you take input tax credit of entire thing on the very first day, and based on this ratio, you reverse for every quarter, and then you apply interest. So hope this is clear vis-a-vis this reversal of capital goods is concerned. So this is there for the reversal of capital goods. Now let us again come back to the original presentation where we were talking about 17.4 for for reversal of input tax credit in case of in banking sector. So in case of banking sector, they are given two options, that they can reverse by the method which just now we have seen, or they can just reverse 50% of their eligible input tax credit. 50% of eligible, friends. So eligible means after reducing your 17.5. So of course, I think that this 50% will be more beneficial because interest is exempt. So major part of their income is exempt. So if we apply the formula, if we go by the rule 42 application, then there will be a huge reversal in case of banking sector. And so therefore, in my opinion, 50% in most of the cases will be beneficial, and you will go by this, that you will take entire eligible input tax credit and you will reverse 50% for that month. So this is there vis-a-vis banking sector is concerned. So in a nutshell, what we have learned till now is like this, that wherever there is wholly a taxable supply, you are eligible for entire input tax credit. Wherever there is a zero rated supply, you are entitled to the 100% credit. Wherever there is both taxable as well as zero rated supply, still you are entitled to 100% credit. Wherever there is non-taxable and exempted supply, so you are not paying tax at all, so you are not entitled to take any credit. Now, wherever the credit is relating to non-business purposes, still you will not be entitled to take any credit. Now, wherever there is both, it is business as well as non-business, to the extent of business is concerned, you will be entitled to have credit. And vis-a-vis there is taxable as well as non-taxable, to the extent of taxable supplies, you will be entitled to have credit on the proportionate basis. Now, let us understand some special circumstances which are there. I will just go through. I know there is 602. So I will just rush through this. New registered tax person shall avail input tax credit if he applies within 30 days, and the credit shall be entitled from the date of application. Right. So his registration relates back to the date of application. Therefore, on the date of application, that is crossing of threshold, whatever is there in his semi-finished and finished stage, he will be entitled to credit. As against this voluntary registration, the person shall be eligible to take credit immediately preceding the date of grant of registration and not from the application. So this is the difference. Then one who is opting out for composition. So one is opting out for composition will be eligible to take credit of the capital goods to the extent of the percentage of the balance years, right? Then he will be entitled to have input tax credit on the stock as well as input and the semi-finished and finished stages. So this is there with respect to the output person opting out for the composition. Now, wherever the exempted supplies become taxable, then in such case, he will be entitled to take credit of the stock and input and semi-finished goods on the date when that exemption has been withdrawn. But in this case, please note that the capital goods which are exclusively used for the exempted product which now has become. So it is not that the capital goods which are used both for taxable as well as non-taxable, that will be eligible. Only that product which are exclusively, though capital goods which are used exclusively for that product which has become now taxable will be eligible. Now coming to the other special cases, one should know that 1 year time frame is there for invoicing and all other things. I have already discussed 18.6 vis-a-vis reversal of input tax credit is concerned on sale. So of capital goods, reversal of input tax or transaction value tax, whichever is higher, you will have to discharge this tax at the time of this. Job worker, we are aware, friends, that in case of a job worker, though the goods are sent directly to the job worker place, one will be eligible to avail input tax credit vis-a-vis the goods are concerned, but that the goods should return to the principal within 1 year. If those goods are not returned, then it will be deemed that the principal has made supply right from the first day he has transferred these goods for job work. Right now, let us understand for capital goods. Capital goods also, the principal will be entitled to have an input tax credit on the goods which are sent to the job worker, capital goods which are sent to the job worker, and the time limit here is for 3 years. Right now, utilization, we have already seen, or we are already familiar with this, that the input tax credit cannot be utilized for interest, penalty, fees, liability under reverse charge, etc. But please keep in mind that input tax credit vis-a-vis as it is having a one color, so IGST of Maharashtra can be utilized against IGST liability of Gujarat. Only the issue is of portal. That I understand. That the issue is vis-a-vis the portal is concerned. Now, let us understand utilization. We all are very familiar with utilization, that IGST can be utilized against IGST, CGST, and as well as IGST. And UTGST, SGST and UTT can be utilized against UTT and IGST. Friends, I have already answered the question which I have raised over here, whether IGST will balance in one state can be utilized against the output tax liability of the other state. Yes, though the portal is not permitting, we have seen the definition of input tax, which is having one color, and if it is a one color, then in my opinion it should be allowed irrespective of whether the portal is allowing or not. Same goes with CGST also. Only in case of an SGST, it is a state specific tax, and therefore that cannot be allowed because of the state specific taxation. Right now, this is with respect to input service distributor. I will just skip this on paucity of time. I will just come down to the penal consequences for availing input tax credit or utilizing a wrong input tax credit. Please note that there are very harsh consequences under the act which have been prescribed under section 132, which says that if you are availed or you cause to commit and you retain a benefit, so the person who is causing to commit a wrongful availment and utilization, so they are here trying to cover the consultant also. If we are consulting in such a way that is causing to commit any wrongful act, then the person will be punishable. If that ITC is exceeding 5 crore, then he will be punishable with 5 years. If it is between 2 to 5 crore, then 3 years. And if it is ITC which is wrongly availed or utilized is between 1 to 2 years, 1 to 2 crore, then 1 year. So this is there vis-a-vis 132 is concerned. Section 122 talks about any person who retains benefits. So apart from imprisonment provisions, there are provisions on monetary terms also. So a penalty equal to the ITC which is wrongly availed, utilized, or passed on will be fastened upon him. There are also provisions for cancellation of registration or suspension of registration if you are availing a wrong ITC or utilizing a wrong ITC. With this, friends, I come to an end for presentation. I know there was a bit hurry in end of the slides and there was some problem due technical problem at my end. I really apologize for that. And now over to the host or the organizing committee, managing committee. If there are queries to the best of the possible of my ability to answer, I will be there to answer those queries.
Sir, there are many questions in chat box. I think 2-3 questions.
Yeah. Can you read for me?
From Suman.
No, I'm not able to hear you. I'm not able to see those queries. Therefore, I'm asking.
Yeah. Sir, from Somani sir, it's true that input tax is single basket, but in view of 3 acts, CGST, SGST, UTT, 7 IGST, with saving clause of definition to take CGST, can it be said that it is a single basket?
Yes, sir. For the reason that if you see both the acts, it does not distinguish. First of all, there is a settlement mechanism which is prescribed and with a separate rules. We have not gone through those rules. So under the settlement mechanism, there is no bar on this. Then the second thing is that the input tax credit definition which is there in this act, the same definition is there in the MGST Act. If they could have bifurcated this input tax, they have done, sir, under Rule 49, that is manner of appropriating the input tax credit. They have said that IGST can be utilized against this, this can be utilized against this, but they have not done this in section 16. And since they have 16, one can very well say that this is a common color, this is a common pool where the interfungibility between this is very well allowed under 2 different states also, except to the extent of the SGST is concerned.
Okay. Sir, next question is whether interest is payable at 24% under section 53 for excess claim of input tax credit.
Sir, I have not covered the interest provision due to paucity of time, but I will just sum it up in the nutshell like this. Please note very carefully, section 51 talks about only and only interest liability on outward supply. It doesn't talk about any, and that on need basis with the retrospective amendment. It doesn't talk about interest liability anywhere else. Any on the other liability. Now, if I come to section 50 sub bracket 3, that talks about interest liability only and only when there is matching and unmatching done. So unless and until this matching and unmatching and is very well placed on the record, section 50 subsection 3 doesn't apply, and therefore in all cases of reversal etc., the question of paying interest does not arise. And this is very well settled also in a recent decision. If I'm not wrong, just give me a time. I have noted that decision also, but due to paucity of time, I have not covered that. Just hold on, I will give you a citation. See, the decision is in Plant Machinery Private Limited, writ petition number 1022 of 2020. And the second decision also is there, that is there in Man Sarovar Motors Private Limited versus Assistant Commissioner, the Superintendent of GST and Central Excise, 100 Madras, where at para number 30, they are talking specifically about this, that reversal, in case of reversal also, the input tax, the interest provision doesn't apply, because there are, unlike in the old provision, there is no provision in the act which talks about levying of interest right now, and there is no mechanism of matching and matching and mismatching or unmatching placed on record till date due to the abeyance of this GSTR 2. The question of levy of interest in all cases doesn't arise. This is my humble submission.
So should we move forward for next question?
Yes, yes.
My client received notice disallowance of ITC as per provision under section 16(4).
Sir, I am not able to hear.
My client received notice of disallowance of ITC as per provision under section 16(4), written which were filed beyond due date marked by this section. There is no DIN number on notice. It is required to reply notice.
Sir, now try and understand that first thing, is this there or any further query is there?
Sir, there are.
No, this is the query. That's all for this query, right?
Yeah.
Okay. So try and understand that DIN number provisions are applicable only and only to the central jurisdiction, right? CGST. DIN number provisions are not applicable for SGST jurisdiction, right? So one will have to take care of this, that from where you have received the notice. And then second thing, I have given you 4 to 5 reasons for which the section 16(4) today also doesn't apply. First is again to reiterate all those points. First is again that interplay between section 16(2) and 16(4). The second is matching and mismatching is not there. The third is law cannot expect me to perform something which is impossible. And the fourth thing is GSTR 2A is in abeyance. So in considering all this situation, in my opinion, this notice has to be addressed rightly. Whether DIN number is not there or not has to take a call, as I have explained the provisions of DIN number also, and then one will have to accordingly reply.
Okay. So should we move on for next query?
Yes.
Query from Pardeshi, sir. Whether cooperative credit society can be considered as falling in banking sector for claiming 50% ITC?
Yeah. So, sir, the section 17 subsection 4 talks about financial institutions, including non-banking financial institution engaged in supplying services by way of accepting of deposits or extending loans and advances. So, so if you're this Pata Sanstha and all these things, or cooperative, whatever sir is talking about, if those are covered as an financial institution, or in any case they are engaged in supplying for loans and accepting deposits, etc., in my opinion they can qualify under subsection 4 of section 17, and they can avail 50%. I'm not able to hear you. You are on
Sorry,
mute.
sir. As ITC includes reverse charge, is it correct to say that only 50% of ITC will be allowed to banks on reverse charge ITC?
Yeah. See, the very definition of ITC says that reverse charge is nothing but an ITC. Therefore, you will have to pay 100% IT on the reverse charge part. And vis-a-vis eligibility is concerned, once it goes into the pool of ITC, then section 17 subsection 4 has to be applied, and accordingly only 50% of that RCM will be eligible for input tax credit.
So now next are only comments.
Okay.
As a word of appreciation, useful presentation and nicely explained. Well explained provision of input tax credit. Ravi sir,
Thank you.
thank you so much. Wonderful session. Thank you, sir. These are the comments received from the members. Now I
Thank you.
request Rakesh Pardeshi to take forward with the session. Rakesh sir.
I think Rakesh sir is not there.
Okay. Now I request Bispute sir from Tax Practitioner Association to offer formal vote of thanks.
Yes, thank you, sir. First of all, I thankful to both the association for giving me hearty vote of thanks. Myself, Prakash Bispute, committee member of Tax Practitioner Association. I am thankful to both the association for arranging such a knowledgeable session. My special thanks to CA Ravi Rathi sir for giving wonderful presentation in a very easy way. I am thankful to all the senior members, Jaju sir, Agiwal sir, Girase sir, Taga sir, Somani sir, Chetan sir, President of North Maharashtra Tax Practitioner Association, Shri Anil sir, Anil Chavan sir, member of North Maharashtra Tax Practitioner Association also. I am thankful to President sir and committee member of both the association and all senior in the profession. If any query remain, you can directly contact Rathi sir on or you can contact us through group, so we can pass your question to the Rathi sir. Again, I thankful all the participants on behalf of both the association. Thank you so much, sir. And
I'm really sorry for the inconvenience caused two times, but it was not in my hands. As there was, due to the change in weather, etc., there was suddenly a network issue 2 times. I'm very sorry for that. Thank you.
Yeah, we will also share the presentation once we receive from Ravi sir.
Yeah, sure.
So, sir, once again, thank you on behalf of Nashik branch for accepting
Thank you.
our invitation.
yes, thank you, sir.
Thank you, sir.
Thank you.